Much discussion has arisen lately regarding tariffs on trade. In fact, in a 24 July tweet, President Trump stated that tariffs are the greatest. Economists tend to disagree.
Disagreement with the president on that statement. In fact, talking to economists, what they say is tariffs are the greatest at 1, losing jobs in the unprotected industry, 2, raising prices, especially on the goods affected by those tariffs, and 3, distorting economic decisions by businesses. Here's a really recent example, the steel and aluminum tariffs, which you can see all those companies around it have said they're going to add jobs. The ones listed there said they're going to have about 2,700 jobs, and the Trade Partnership Worldwide said they'll add 26,000 jobs. Sounds good, right? Well, let's go to the other side of the ledger. Those 26,000 jobs added, another 500,000 jobs or so are expected to be lost because of higher steel prices, which saps consumer spending and raises prices and otherwise reduces growth because of the higher prices. Let's go back in history and take a look at some sort of forgotten one. Obama's, I'm calling them flat tire tariffs. According to the American Enterprise Institute, 1,200 jobs were saved. 2,500 jobs were lost. The cost of the tariffs to the U.S. economy was $1.1 billion, and it cost almost $1 million per job saved. So note, by the way, that study is from the American Enterprise Institute, the same place that Kevin Hassett, the president's economic advisor, comes from. Sarah, when I talk to economists, they say the greatest was Muhammad Ali, not tariffs.
As stated, the domestic consumer pays the price for tariffs. Consider this example from Carball. This line illustrates domestic supply without trade. This line, domestic demand. Point E is the price equilibrium of an economy without imports. This line demonstrates a supply schedule under free trade. Notice the lower price at equilibrium point F when compared to point E. This supply schedule here is one that considers imposed tariffs with an equilibrium point G. Notice how the equilibrium price is higher, albeit much better than an economy without any trade at all. Yet it can be seen that tariffs result in higher price for the consumer. Carball states, although the free trade argument tends to dominate in the classroom, virtually all nations have imposed restrictions on the international flow of goods, services, and capital. Arguments for tariffs include job protection, protection against cheap foreign labor, leveling of the trade playing field, and maintaining the domestic standard of living. President Trump appears to be using these tariffs as a means to an end, hard bargaining and perhaps his art of the deal. But these tariffs are having immediate impacts on certain businesses, in particular agriculture and the auto industry. Trump's suggestion to us is that we be patient and wait for this hard bargaining to pay off with a better trade deal.
Making tremendous progress. They're all coming. They don't want to have those tariffs put on them. They're all coming to see us. And the farmers will be the biggest beneficiary. Watch. We're opening up markets. You watch what's going to happen. Just be a little patient.
Time will tell if this strategy will pay off. In the meantime, we shouldn't be surprised to see increased prices of certain goods and services.
Designed in part to combat the growing global influence of China.